Novak Djokovic won $2.75 million for winning the Australian Open last night. And while the title of this video isn't completely true, it is quite common for tennis players to set up shop in foreign countries to be as tax efficient as possible. In this video, we're going to be talking about tax havens. Hey guys, welcome back to my channel. My name is Michael and I'm an accountant from Australia. On this channel, we discuss money and finances so that we can all live more fulfilled lives together. Now, as I mentioned in the introduction, we're going to be talking about tax havens today. And if you don't know what that is, don't worry, I'm going to go over that later. And I'm also going to explain how they work, which tennis players make the most of it, and why there's this one tax haven in particular that a lot of them seem to like. So stay tuned to the end if you want to hear about that. First of all, we need to ask, what is a tax haven? The International Monetary Fund doesn't refer to them as tax havens, instead offshore financial centers. And the IMF have done a lot of work about trying to minimize the impact that offshore financial centers have on the global economy. So they've done a lot of research and recommendations on these countries should be increasing their taxes so that global investors and global companies don't just set up their company structure in these countries just to make the most of the tax efficiency. The IMF recognized 26 nations as these offshore financial centers. The most common ones being the Bahamas, Monaco, Panama, and a whole bunch of some Caribbean nations. And what all these nations have in common is that they all have little or no income tax rates, which is why they're favorable for international athletes. But how do these tax havens actually work? Professional tennis players make a lot of money. As I mentioned in that introduction, the winner of the Australian Open gets $2.75 million just for their 2 weeks of work. However, prize money is just one piece of the pie. Most professional tennis players will actually make a lot more money through other avenues, such as endorsements, sponsorships, appearance fees, and lots of other investments that they have. And this is where tax law gets tricky. Prize money is actually taxed on where the income was earned. So if you win Wimbledon, you will be tax dependent on the UK tax laws. Or if you win the French Open, you'll be tax dependent on the French tax laws. But these rules are a little bit different when it comes to endorsements, sponsorships, and all the other income streams that they have. They are a bit more dependent on where you reside, where your residency is, and also to do with where the contract is signed. So if you're physically in the location where you sign a contract, that could potentially mean that that income resides where you physically signed that contract. And because tennis players are globetrotters, they're on tour for most of the year, jumping from country to country, they can get a little bit creative with where their residency is. So that's where the really clever accountants of these tennis players have recommended that they set up their residency in a tax haven country. This way, all the other income that they make that isn't the prize money may be taxed at the income rate that their residency is, which is that tax haven. And so, for example, to gain residency in one of these tax havens, if we're just looking at Monaco, which is a really popular one, you have to be living in Monaco for 6 months and a day of the year. However, this isn't practical for the tennis players as they're always globetrotting. They will tend to just buy investment properties in these places and call that their residency. This leads us to which tennis players actually have set up their residencies in these tax preferred locations. Now I've got a list here that I wrote down earlier. So in Monaco, we have Djokovic, Tsitsipas, Medvedev, Dimitrov. And in the Bahamas, we have the two Australians, Kyrgios and De Minaur, as well as Shapovalov. In the Bahamas, we have the two Australians, Nick Kyrgios and Alex De Minaur, as well as Shapovalov. So I probably butchered that, but these players have set up tax havens. I saw a study when I was researching for this video that 20 of the top 32 male athletes have set up their residency in a foreign country that is either recognized as a tax haven or just has a considerably lower tax rate than their actual home. Monte Carlo is in the Principality of Monaco, and Monaco has some really interesting tax laws. Monaco has no personal income tax rate, no capital gains or net wealth tax, no property taxes, and no corporate business tax rate. Which from a politics and economics point of view, I start thinking, well, how on earth does Monaco actually make an income? And I did a quick search on this, and that Monaco's GST rate, or the equivalent thereabouts, is about 19.6%, meaning that the cost of living is just a lot higher. And this brings us to the last point of the video. Will Djokovic and Medvedev actually end up paying taxes here in Australia for their Australian Open winnings? And the short answer is yes. As I alluded to earlier in the video, the place where you physically earn the income is a big factor in determining which tax laws you fall under. So our Australian tax law states that if you physically earn your income while you're in Australia, you have to pay tax in Australia. And now there's some double tax agreements that are between countries. Now, me just going off the cuff, I haven't seen how this works. I would say that the tournament will have to withhold taxes when they pay out the prize money. Approximately 50% will probably be withheld, given that will be the marginal tax rate for the $2 million winnings. And then Djokovic or Medvedev will have to go ahead and lodge an Australian tax return or work out the double tax agreements between Monaco, which they both are, and Australia. So at the end of the day, these professional athletes are paying taxes to the Australian government, and we're benefiting from their performances and entertainment financially, and we just love watching sport. And that brings us to the end of the video. If you enjoyed this video, you may enjoy watching this one that I made earlier about how you can avoid capital gains tax when you sell your investment property in Australia. Please also consider subscribing, and also if you have any questions, please leave a comment. I'll get back to every single one.